Debt weighs heavily on those who are burdened by it, and today we will discuss the Harvard study that confirms Social Security is bankrupt. You came here for the truth, so let me unveil that for you. We know what debt can do. Look at Greece and the credit default swaps that brought them into this situation where they are right now. We know that the system of debt was created by these bankers, by the technocratic elite, who designed this intentionally as a method of control. I want to get into this information out of Harvard, but also connect it into the bigger picture because that's what I always like to do. But first, a little humor. Congress tells court that Congress can't be investigated for insider trading. That's right. They are actually telling the court that they can't be investigated for doing something wrong. This is such a joke that they can get away with this, and assuredly they will get away with this. Every one of these schemes always happens over and over again. Nobody gets in trouble. There's barely a slap on the wrist. Yes, occasionally they burn one or two individuals, but overall, they're simply not getting in trouble for the things that they do. Let's move on to this here. The Social Security Administration projects that its trust funds will be depleted by 2033. Not an optimistic forecast, but it may have been even bleaker than that. Yes, that's right, 2033, that's huge. They would have to really scramble to get everything prepared by that time. But of course, the situation is in fact worse. Looking at this new study out of Harvard, they're saying that it's consistently overstating the financial health of the program's trust fund since the year 2000. I would say even longer than that, but let's go with what they say here. This article happens to be out of CNBC, but they're basically quoting these individuals at Harvard and Dartmouth. These biases are getting bigger and they are substantial. Social Security is going to be insolvent before everyone thinks. If you scroll down further in this article, I don't have time to get into it today, but if you want to do that on your own, you can see that certain parts of it are definitely going to be bankrupt by 2016. And just a news flash, we're right around the corner from that. It's bankrupt, it's broke, it is worse off than many of the individuals in the US who are living off of the government. We have a huge problem right now. So what has happened here is that there has been intragovernmental debt. What this means is that they're able to pull money from the future and just use it to pay off war expenditures or any other thing or scheme that they decide to create. But we know that they are stealing money from themselves, borrowing from the future, but now that has caught up with them. Let's move on to this here. This is the serious information. If you want some of the best, part of the, I would say, top 5 indicators of the health of the nation, these are the 2 that you need to look at. Labor force participation rate, something that I consistently talk about. You can see the chart. Probably can't read the numbers, but we're looking all the way from present day all the way back to 1978, I believe. And you can see that we're at decades low numbers. This is incredible to think about because the nation has expanded in the amount of people that are there, obviously. So that brings me into my next point, people not in the labor force. A number that has been going up consistently. The chart begins in 1990 to present day. The amount of people in the country has increased, yet the actual people in the labor force are not in the labor force, I should say, are increasing dramatically. This is not worrying anybody because the unemployment rate is staying below 6%. Wow, what an incredible feat. Obama got the unemployment rate to go down. Extremely good for him. I'm so proud. Let's move on to this from my book, which I'm talking about the statistics that they're using, which are completely corrupted. The actual rate of inflation is much higher than what is reported I'm sure you know, but John Williams' shadow stats provide the most reliable source of inflation and other figures that can be found. He calculates the rate of inflation using the method from 1980, which is more accurate in showing the cost of living needed to maintain a constant standard of living. When you look at these stats, you know they're completely fake. There is no way that ever this inflation rate could be so low as they say it is. Look at what the Federal Reserve considers inflation. You're looking at near 0%. They say that we have a tough time getting to 2% inflation. Well, surely you do when you don't factor in food and energy prices, electricity in particular going up consistently. And this goes to show you how terrible the statistics that they're providing for us. And you don't even need to look at the statistics. Look at what you paid at the grocery store today. Look at what you paid last year and the year before, and you will see undeniable facts. Let's move on to this. Growing number of seniors account for Ontario insolvency filings. Now, this happens to be, of course, out of Canada, but this applies to most nations around the world. This is out of the Globe and Mail. Seniors had the highest level of outstanding debt among people filing for insolvency in Ontario, including the largest balance of unpaid payday loans. A study of 6,000 personal insolvencies in Ontario in 2013-2014 include people filed for bankruptcy or filed consumer proposals shows a growing number of people over age 60 are among those hitting the debt wall. I don't think that it's just people around the age or over the age of 60. In fact, it is all people right now. The students are in so much debt right here, from their student debt, from their personal debts that they have accumulated over these years. You look at the actual cities, states, counties, provinces, and so on, and you see a terrible situation where they're unable to pay back what they've accumulated in debt. This system is designed like this on purpose. They can't pay it back. I've said it 100,000 times. We're going to move on here. And we're looking at more than 1 in 4 U.S. renters have to use at least half of their family income to pay for housing and utilities. That's right. Just as I said, they have to use half of their family income to pay for these essentials. Where are they going to get this money from if everything continues to decline? The number of households had jumped 26% to 11 million since 2007. That's right. Since 2007, this situation has gotten worse. We have a problem with housing, with the debt, with the subprime mortgages, yet since it all crashed, it has in fact gotten even worse. It didn't get better. There's no recovery there, despite what they're telling us. And despite what the stock market is and all of the naysayers that are really blinded, and it's really a shame because all of their money is most likely within stocks, within bonds, all of these paper assets. And they have every reason to believe that this will, in fact, continue. The stock market can rise and rise and rise, and interest rates can remain low forever. It's quite sad when you talk to these people every single day, and they're in this position. Since the end of 2010, rental prices have surged at nearly twice the pace of the average hourly wage. That's right, it's not keeping up, and it hasn't been doing so since at least 1970, at least the early 70s there, where we can measure that considerable change that has been occurring. You used to have one person in the household working for everybody, and they could afford their 2 cars and their nice home, and everything was all in check. But now, today, a very different story. Let's move on to this, how things are really changing. Chinese developer leads transformation of LA's skyline. This individual here is overseeing $6 billion worth. This project specifically is about $1 billion of real estate going up, supposedly transforming LA's skyline. A lot is changing here, and it is only for the elite. The individuals are having to rent more and more. The regular individuals are not going to be able to afford what they used to. The average hourly wage, as I said, is not keeping up with the expenses that are being piled up. They're in more and more debt. They're all the way pushed to their limits. This is something that cannot be fixed by all of their methods of kicking the can down the road. And a connected article is this: China-Russia to-hold first ever Mediterranean naval exercise. This is something I brought up from the beginning of May. Just wanted to show you this. China is definitely partnered with Russia on every single thing they are doing, and it seems like it's not just politically, not just economically, but militarily as well. And of course, there's a lot of saber rattling from each side, and we can see little fights that have occurred. We see jets constantly being scrambled in these sort of international waters or, near their borders and such. So we see a lot going on. And this could mean some differences for our future. If you found this video informative, please give me a thumbs up. I really appreciate that very much. I would also like to tell you that there's lots of work being done on my website. You can go over there, but it's still under construction. And last but not least, if you like this information, I know that you will like The Money GPS, my book. If you go over to Amazon, you can actually flip through the book and see if you like it for yourself. Take care.